Hi, everybody, again. It's Leanne here, and we're here to talk about real estate. For a lot of women, real estate and the dream of owning a home can be the very first source of wealth that they envision for themselves and their families. I don't know about you, but I love watching HGTV and dreaming of owning your own home. But what about investment properties? What about using real estate as an avenue to earn a second income? We're bringing together right now here four women, two duos, who are some of today's real estate experts and will help you get started on real estate as a way of earning a second income. And not only doing it by yourself, but doing it in community with friends. I'd like to bring four women, two duos to the Beyond Money stage. Ali Ballum and Amy Leong. Amy and Ali are two of Vancouver's top realtors with Engel and Volkers. Together, they own over 13 properties worth more than $7 million in total. This broker duo are advisors as well as coaches to newcomers on property investments, including joint ventures, where each party puts in about 50% of the cost. Next, we have Erica Smith and Lorena Magallanes, co-founders of Condo Chicks and Stomp Realty. They have created a team of innovative and motivated professional realtors that are passionate about real estate and are exactly who they are themselves. Ladies, welcome to the Beyond Money stage.
Thank you. Happy to be here.
I thought first I would start with Amy because you have an interesting story about pulling random people aside at Aritzia to talk to them about investing in real estate. Can you tell me about where you were and what was that all about?
Yeah, I think because I started working at a mall myself in retail. I worked for a telecommunications company for about 10 years. And I always knew there was something more for me. I didn't know what that was. But now, being a multimillionaire in real estate and starting from a young age of 24 when I bought my first property, I think Ali and I now have about 13 properties between the two of us. I love to give back to girls and young women. And when I go to the mall now and I, have, the money to spend on clothes, whereas before I could barely afford $100 shirt. And now I, have the luxury of buying what I want. I always ask the girls, are you spending all your money on clothes? And they always say yes. And I said, follow me on Instagram. And if you ever want to go for coffee, just let me know. No obligation, but, don't spend all your money on clothes. Pull back. Don't buy that Prada bag, but you can buy it later, and you can own whatever you want, but to be financially free. I think that's a big passion of ours, is to teach people as young as possible, especially young girls, because it's easy to spend money these days, and they have to have someone to look up to that is investing in real estate as a woman to do that. So yeah, that's why I kind of always ask them if they're saving their money.
I think it's good too, because I think you bought your first designer handbag you probably had owned 4 properties prior. So until she was worth probably $1.5 to $2 million before first designer bag. So I think it's just like you said, looking, trying to save and buy your first property before you spend that
and having
$8,000, on a.
I think I'd rather put a down payment on a condo than own an expensive handbag, as we like to say.
And we still own more properties than we do handbags. So
yeah,
that's the goal. That's definitely the goal. So you both, at the age of 24, each independently bought your first places. How did you go about doing that to save for that first down payment and actually pulling the trigger on buying that first property?
So sure, yeah. So I was working at, I'm sure you guys have Cactus Club in Toronto. So I was working at the Cactus Club here in Vancouver, and a girlfriend of mine was a realtor at the time, and like a lot of my older friends around me were buying real estate. And I thought, oh gosh, I was 25 at the time. I said, oh, I'm only 25 years old. I'm working at Cactus Club. Like, I was making very good money, but I weren't get the money to be able to, buy my first property. And so thankfully, my parents went in on the first one with me. I paid the mortgage, but they helped me with my original down payment. And that's how I started getting my first property, and then that one led to the next one with me being able to save just appropriately and managing my expenses.
And I think for myself, I was out of the house at 18, renting, basement suites. I didn't have, a luxury upbringing by any means. I just knew, every month I would work so hard and then my paycheck would go to my landlord. And I just thought, and I had run-ins with a couple of landlords who took advantage of me. They'd come downstairs, come right into my place without notice. And I was so nice and naive and young. But I knew if these people could cash my check, and, why couldn't I be that one day? And now my dad calls me a little land baroness and he's like, what property did you buy this month? So I think it just shows that, wherever you come from and whatever, if you're a waitress at Cactus Club or myself selling cell phones, and you can amass a big portfolio, but you need the right people in your path, and you need to study and treat it as if it's like university. And both Allie and I went to university. We both have our degrees. Allie's got a double major. But we didn't do that until later on in life. We kind of did it backwards. We bought the property before we actually finished school. But it's been so rewarding, and now we just love to pass on the wealth love.
So yeah, sometimes like when you think about real estate, it almost feels like it is very complex, You might have to go to school for it, and study really hard, but you really still want to be able to have people have access to this type of investment. So Erica, Lorena, what should someone start as a beginner who is considering to get into investing in property?
Well, I think the first thing is try and save as much as possible, as you ladies have done. It's, the biggest thing to do is try to save money wherever you can. Don't buy the big purses. Don't, go out for dinners all the time. And try to just try and get into the market, even if it means, putting down less than 20% down. Sometimes you can't save as fast as the house market is increasing. So it's, in my opinion, just save whatever you can and put down whatever you can, even if that means paying a little bit more in insurance cost. Just that's what I would say.
Appreciation is so strong now, and sometimes when you're working with buyers, and we have to really encourage them to just get into the market. It might not be exactly what you want, but if the cash flow is positive, then you're going to have a much stronger chance of having a strong appreciation down the road. I think that's our biggest struggle with buyers, is having them look long term as opposed to short term. And we've been pretty lucky here in Toronto, where long-term appreciation can even happen within a year of purchasing a property now. So it's just getting our buyers in that mindset to start setting themselves up today for the future.
Yeah.
Yeah.
Lorena, I hear what you say about saving and trying to save a little bit more. And I think we also like to talk to our audience of women about earning more, So another way to kind of build that down payment is maybe to think about starting a side hustle, even for like a little while, or get that promotion, ask for that promotion as well too. And now really target that money towards buying that first property or putting down that down payment. What are your thoughts on that first investment being something that you might not really like, or something that you want to buy, or even pre-construction? I'm going to pass this over to Amy or Allie. What's your thoughts on, buying a pre-construction as a beginner type of investor?
We think it's great. We focus a lot on pre-construction and pre-sales. It has to obviously make sense. So we get approached probably 3 or 4 times a month on a project. And if you're getting in when the rest of the public's getting in, then you're too late. So I think if you are getting in at the right time and you're getting in before the public, if you've got that connection with your realtor and the developer, and it does, because it's kind of for savings. You can buy something that's 2 years or 4 years away and put a smaller down payment in the beginning, and then kind of gradually save over time until the rest of the money's owed. So we've always found our clients have done very well. Mind you, we get our clients in when it's pre, VIP, so it's before it even hits the public. So they are buying at a reduced market value rate.
Yeah, it's got built-in equity.
It's built-in equity, usually about 10% built-in equity.
Yeah. For example, most people that we are helping are, teachers, firefighters, RCMP. We help a lot of them with their investments. And, we just helped a bunch of them get in for, $42,000 they needed down for only 2 years. So if you don't have $42,000, which, Ali and I didn't have even for our second property or our third, you can do what I'm sure we'll talk about today is joint venturing. And then, if you 50-50 that with someone that you trust or know, or a family member, it's $20,000 that you need for 2 years instead of 40. So that's why, doing it together and collaboratively in a smart way with the right, obviously, joint venture agreement, it catapults you forward and it grows your portfolio that much faster.
So really interesting information. So all of you guys following on at home, put your comments in the chat box. We want to hear what you have to say about how you go about buying this first property. I want to also ask the same question to Erica and Lorena. Prices are skyrocketing. How do you, as a beginner, do you get into this market? What do you suggest? What is your advice?
So one thing that we're seeing, a huge trend here in Toronto, is a lot of first-time buyers now who are trying to get into the market are getting money from their parents. So as opposed to having wealth passed on, later on down the road, we're seeing a lot of parents help their kids just get into the market now, because the way the market's going, it's going to keep becoming more and more unaffordable. So as I mentioned before, whether it's a side hustle, whether it's money from your parents, no matter where you can get your money to just get into the market, you're setting yourself up for down the road.
Yeah, the last little while, Erica and I have had a couple of clients actually that have had money passed on from their early inheritance, and it's surprising how many new clients that we're getting that it's like, okay, my parents are giving us a new inheritance, our early inheritance, and we're like, wow, that's amazing, that's great. But like the girls were also saying, there are a lot of what we're seeing too is there's a lot of like companies and a lot of talk about trying to partner up with a friend or family as well, but like try to partner up with a friend that maybe you can kind of do a joint venture and purchase property, just so that it makes things a little bit easier. And a lot of buyers are having to conform to buying condos, for instance, that might not be their 1 bedroom plus den like dream home or their 2 bedroom dream home. It might end up being that 1 bedroom with a small window or a layout that isn't exactly to their liking, but as long as they can get into the market, that's what we're seeing a lot more of.
Okay,
I think they can sell that project, that first condo, and then they can just keep building up their equity and their net worth. So you just almost have to just get into the market and just trust, that you're putting your money in a right spot, and it's going to end up building so much more equity for you down the road.
So a lot of that is risk taking, right? Like I think as women, we got to get used to the thought of putting money away today and risking in a way that it will grow in the future. But one of the ways you can mitigate that risk is maybe working with a friend, working with a family member. And Ali and Amy, you guys were talking about joint venturing. How do you structure things where people can get into the market where they might not have familiar wealth, they might not have generational wealth, but they've got a bustling community of people who are striving to grow just as much as they are. How do you structure these things so that they can also get into this market?
Yeah, so we've done a few joint ventures now. Even I was doing personal training, and my personal trainer, we own a condo with him and his girlfriend in Kelowna because they were so scared to get in the market. They're in their early 20s. They had some money that they were saving, and I'm working out and chatting, about real estate with him. And he said, Amy, no one's ever shared this with me, and thank you so much. And literally 2 days ago, they text us. So they've not only bought a condo with us, they just needed to have that, maybe support system. So we each put in, so Ali put in 25%, I put in 25%, they put in 50%. They got the mortgage, but we found the deal. So you kind of have to spread out, who's responsible for what, and percentage sharing, which is in any, partnership. And because we got in very early, we got the best pricing, that condo is up over 150,000 now. So but they're going to get the mortgage. They already bought another property, the two of them. We're so proud of them. And they sent us photos, and they just needed to start.
They never knew it was possible.
They just never knew it was possible.
Around like-minded individuals that told them it could happen, right?
Their parents were saying, the market's so, everyone says the market's so expensive, and it's so daunting to people that's why I wanted as quick as possible to say, talk to people who are actually doing it, because there's a reason why there's a top 1% in our, economy, because they're not really sharing that much. And if they are, they charge an arm and a leg for it for consulting. But if you do have people you can go to, like these women on the panel, and they're walking the talk, then you can get there that much faster. So yeah, we did do a joint venture with them. With Ali and I, we just do 50-50. One of us gets the mortgage. We each put up 50% of the down payment, and then we kind of trade off per property of who's going to go on the mortgage. Other people, like other townhomes that I own, I do the management. I find the tenant, but the other person got the mortgage, and then I found the deal, and that one's up a huge amount of money. So I think it's important to share with people listening that, yes, if you don't get discouraged if your parents aren't giving you a bunch of money. I never had, parents just handing me money, but you do need a plan in place, like you were saying, of saving money. It took me 5 years of saving $500 a month to get to my first down payment. It is possible. You just have to put a plan in place and stick to it.
Erica, Lorena, do you guys have anything to share in like plans of how do you get into that market, working with community, working with each other? You guys have built an amazing business, two amazing businesses, working together to get real estate in the hands of more and more Canadians, and especially women. What else can you share in that vein?
So I just want to touch upon what the ladies said, because it's so true. I feel women don't always believe that they can make it happen. And it's so true. There's so much media now that's focused on the real estate market, and we're constantly hearing, the market's too strong, you overpaid for this. And that narrative alone makes women feel nervous to invest their money, right? So I think the way Lorraine and I work, and I feel like we're pretty aligned with the ladies, is it's just giving the right information, it's giving the support and finding them the right deal and aligning them with the right people. Because it's like what you said, if we're all doing it and we're all moving forward with building our net worth, and we're taking equity from our properties to purchase other properties, there's no reason why not everybody else out there can do it as well. So it's just finding that perfect support system and to give women the confidence to invest their money, because at the end of the day, you will create so much more wealth investing in real estate than any other investments in the world today. So it's just about, supporting women and making them believe that they can do it. We all do it, so why can't they?
Yeah, just encouraging and supporting and giving them the numbers. And maybe instead of them looking in one area that they're kind of caught up in, maybe broadening the neighborhoods in different areas that maybe they might be able to find something a little bit at a lesser price. Because the comment that we often get is, especially for single females, is like, how do we compete in a competitive market with dual income? Or how do we compete with the families that are getting money, like the single people that are getting inheritance from their parents? Like, how do we compete with that? And so the main thing is trying to just keep encouraging them and keep up with the positivity that they can afford something. Breaking down the numbers, whether it's an investment, whether they want to rent it out, letting them know that they can do it. And maybe it just means, instead of looking in one area, just changing maybe a different neighborhood, but still investing and getting into the market. That's the main goal.
The key, getting into the market. That's the key.
Yeah, I'm definitely thinking back to so I'm thinking back to one of my first purchases, with a condo, which my real estate agent was Erica Smith. Just thinking, I want this to be an investment at one time. I wasn't actually thinking of buying my forever home right away, what that would look like and how much I needed to do that as a single woman. I was really thinking strategically of I want to buy a place where once I'm ready to move from it because of whatever circumstance, I would be able to keep it and rent it out. So that actually kind of informed what I actually wanted to buy. I didn't want to spend what the banks were going to give me to spend. I wanted to spend something a little bit less that it could turn into an investment property. So it's really good to have that conversation about what you want to do and how it is a first step in building wealth. But like you said, you have to be exposed to those types of conversations.
I think it's smart
So
because I was gonna say we always look at clients and they say when they're buying their first home, it's just a stepping stone for you. So don't get too attached. It needs to make sense in terms of numbers, what it's going to rent for when you eventually keep it. Because we always try to tell people, if you can buy real estate, keep it. Take equity out and buy something else, but try to hold that property because it's so hard to get it, right? So keep it and do other things with it. So I think, like you said, focusing on your first property, if it doesn't want to be in the area that you want to be in, but another area makes sense and you can keep it for an investment and kind of keep it in your portfolio, that's what's most important.
So can you talk to our listeners a little bit about what is going on right now in the real estate market? I mean, Canada is crazy. Toronto, Vancouver, you guys are in the hot markets. What are you seeing right now as the hot things going on in the Vancouver market? And then we'll turn over and to talk about the Toronto market.
Yeah, Vancouver, I think, again, for affordability, we just got ranked as we beat New York, which I don't know if that's a good thing. The price per square foot, we just sold in a building that it hit $3,300 a square foot. So
what?
I do.
Wait.
New construction.
Okay, all right. Okay, 3,300 a square foot.
3,300 a square foot. But again, we have to understand that Vancouver is, a very, very desirable place to live. Why is it hitting those prices? Why are people paying for those? And this is pre-sale pricing. They know something in the future, and they're willing to put their deposit down and stake that, in 5 or 6 years, when that beautiful concrete building is done, that they're going to either make their money back and then some, right? So, and these are extremely wealthy people. But again, it's on sale right now. I know that sounds, 3,300 a square foot, but you can still buy for under $1,000 a square foot in downtown Vancouver. Not a lot of people understand that it's on sale at a 4-year price discount just in certain sub areas. And I think that's where our expertise lies, is we help manage a lot of people's portfolios for real estate. And our job is to, it's an algorithm, and we know it inside and out. We have insane spreadsheets. I'm a spreadsheet geek, and we run everything through pro formas, they're called. So we can, type in the purchase price, and we know the rents inside and out, and it spits out, what are they going to make? What's the projection for appreciation? And, so it is risky, like you said, but it's calculative risk, we like to say. We study economics inside and out, and we really treat it like a science, which you don't think, I know this panel is really good at that, but I think the majority of realtors, they don't even own investment properties. And so that's where you really have to make sure that, you know somebody that understands the data, and there is a checklist to follow, and we do that pretty well. So I think for our clients, we have been having a shopping spree downtown Vancouver.
Because it's still, like Amy said, it's on sale, and a lot of the places we're finding is 2017 pricing. So yeah, the rest of, North Shore, West Van, Burnaby, like Fraser Valley, everything's gone crazy. Even condos, townhomes, houses have gone through the roof. But Vancouver still hasn't seen that appreciation yet. And so it is going to be, it's just a matter of time. And since it is on sale, we're getting our clients in that are, buying at a reduced, $150,000 cheaper than it was in 2016. So that's a pretty big number.
Yeah, where can you find that? I think that's why we're getting international eyes, and we're just trying to push people that can afford it to say, get one, just get something downtown before, Amazon headquarters is coming. We've got, $1 billion plus hospital coming. There's some really interesting things economically that will secure your asset downtown, and it's so easy to rent. Like, we've never had any vacancy for any one of our investor properties in 10 years. Not one, not even a month vacant. Like, that's huge. So
Even during the
I think
pandemic.
Even during the
pandemic, they had to lower the rent a little bit, but it didn't matter. They still had a tenant. So it's very strong. And just like, I'm sure the ladies in greater, GTA, there was a soft condo market where people weren't even looking at high rises. There was a oversaturation of properties, and we had that too for a little while. But now look at it; it's starting to really take off, and we just want to catch that before it does in Vancouver, which it will very soon.
Yeah, can you guys, Erica or Lorena, can you share a little bit more about what the Toronto market is doing in,
So it's interesting. When COVID hit, the Toronto market went really funny. We had so much inventory with the small cookie cutter product. So all the investor product, which is the 1 bedrooms, 1+ dens, they were all hitting the market because we had an issue on the rental side. So tenants had stopped paying rent. So we saw a flood of the smaller product hit the market, which was great for investors. I liked you're saying about it was a shopping spree, like we were seeing condos that were, say, regularly priced at 600, 700,000. We were seeing condos listed in the 400,000s, which we have not seen since 2010. We saw craziness happen in the larger product. So we attribute a lot of that to a lot of people started working at home. So they wanted that extra den, they wanted that extra bedroom. So the larger product, the 2 bedrooms, 2+1s in the housing market, I mean, it just exploded in terms of the supply and demand.
Now that, the vaccinations are in place and things are a little bit more calmed down, now prices for condos for the 1 bedrooms, 1 bedroom plus dens aren't quite as cheap as they were about a year ago. I would probably say the cheapest to buy that type of product was like August up until the end of last year, and now prices have gone right back up again. So
Again.
So, I love the way that you guys talk about real estate. You talk about it as a product because I think a lot of people can get attached to their home, and they might actually end up spending a lot of it on stuff that might not translate into wealth building, which more power to you, for sure, more power to you. But I just really think that the way you talk about this is just, it's a really kind of a mind shift for a lot of people to think about buying more properties with their friends, however they do it, where they can have that as a product, another thing that's going to be helping them to generate wealth. So a really good way of looking at it. I'm wondering about just, if you're still a little bit nervous, this happens in the stock market as well too. The stock market, everything tanks. People are like, I'm going to pull out my investment, right? Or whereas some of the smart people say, I'm going to invest even more. What do you think about timing your investment as becoming a beginner investor? Is there such thing as the best time to start to become a real estate investor? I will start with Erica and Marina.
I would say yesterday is the first time
Yeah,
to become
the sooner the better.
a real estate investor. And I mean that. It goes back to, you just have to get into the market. And there's a lot of skeptics out there. However, we have yet to have a client who has ever lost, in real estate. I mean, we have clients that are constantly telling us, I wish we had bought 5 in that building. I wish that we had bought, 10 in that building.
Remember when prices were at $600 a square foot?
Exactly. So it's funny. So when COVID did hit and there was inventory at $600 a square foot, it was going back to everybody and saying, now you have to buy, where Toronto can go. So buy now.
We were going to a lot of our first time home buyers being like, prices are really good right now. If you're looking to buy, this is the time to buy. And for the most part, first time buyers are always going to be, or first time investors, they're always going to be very scared. But I think the key is also to let them know, this is your stepping stone. It's good to kind of keep I like to say a 5-year mark. Like, just make sure, your life can change in 5 years, but at least have that first property that then you can use that equity and continue building your portfolio.
Amy, Ellie, when's the best time to start?
Just like you said yesterday, I think a lot of our clients are like, oh, we're buying at the height of the market. Even for an example, a year and a bit ago, our clients, Amy tried to get them into this townhouse development in Willoughby, and it was $599. And they said, Amy, it's too high. I don't want to buy. They didn't end up buying that same property today, not even, just over a year later, at $599 is now $899. So had they bought a year ago when the market was, everyone thought, very high for townhomes, they'd be up $300,000.
Now, and I think it's important too to, like, I agree with the yesterday comment for sure, but I really think you have to study the growth economics. I'm a huge person that does that. I just study something like inside and out before I buy, because I come from a very, my dad's Chinese. He's never bought any real estate except our first home. He, was angry at me when I bought my first place. And then he said, he got over it and then said, you better work and keep your job and pay it down as fast as possible, because that's what he, old school mentality. And so I was also scared to do anything that I said, unless I prove my dad wrong and show him why, like the reasoning is so important behind when you buy. Because if you just go buy whatever, you could get burned. You can't over leverage. You have to know, there's certain things and rules to follow. So I just want people to know that, yes, get in the market, 100% get in the market, but understand and discuss with your realtor or with the, the ladies on this panel that understand it from a different, more intimate level, because then you'll feel a lot better if you have, maybe you're a visual person. Okay, well, is there a hot cafe that everyone's lining up down the street for, having brunch every weekend? Is there new businesses coming in retail? Are you buying near transit? How are the schools? Are they just a school, or is it a highly rated school? So there's all these things that you should be studying. Then you're safe, right? Then when you buy, you're like, okay, you know what? If I can't live here, if I can't for some odd reason, let's play devil's advocate. I don't have enough money to even live in my place. I lose my job. Okay, well, can it allow rentals? We hardly sell in any building that doesn't allow rentals anymore.
Because things happen. You never know what can happen. You could lose your job. A family member having to get sick. Something could happen, or you have to move out of the country or move out of state. Then at least you've got the ability to rent it out and never sell. Even if something were to happen, you always hold it.
And that's why we like real estate over stocks. We've lost money in the, marijuana stock was really hot at one point. So we threw some money in there but we lost it.
Never, five grand will never get back.
I know, 5 grand, could have.
Well, it goes back to your comment, right? You know the economics of real estate. That's what you know, and that's what I want people to come to you guys to talk about. The economics of the stock market, it's still diversification, right? So, yeah, you just gotta be careful. You gotta be careful. You know what? I've really, truly enjoyed this conversation with all four of you. And I know people can reach out to you and talk to you about the things that you are doing. Amy and Ali, you guys have a website. You're on social media, a really great presence. Same with Erica and Lorena, the Condo Chicks and Stomp Realty. You guys are doing some amazing things. And I just want to thank you so much for taking this opportunity to talk about getting square footage and making wealth with the audience that we have here at the Beyond Money Summit. So thank you so much.
Thank you.
Next.
Thank you.
So we are going to continue the conversation. We're going to be talking about, of course, building wealth, building generational wealth. So everybody just stay here, stay to this channel, put your comments in the box, and we would like to hear more from you as we keep talking about alternative investments and how women can build wealth.